Hello folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. In our today's fundamental video, we're going to talk about the dead cat bounce. Yes, I am calling this a dead cat bounce. Why? Because last week we've seen this massive drop in the equity markets, and I'm speaking of the global equity markets. Doesn't matter whether we are speaking of the Dow Jones, the Nasdaq, the S&P 500, or the major indices over in Europe, such as the FTSE DAX and FTSE MIB, all of them. All the equity market, what we've seen is that it dropped nearly more than 10%. But this coordinated effort by the central banks around the globe in order to soften the blow from coronavirus has really revived that confidence among investors, because they think that markets are going to recover and we're not going to see a prolonged period of a slow growth, which is completely wrong in my opinion, because I think central banks giving a coordinated, having a coordinated action is certainly a positive message for the markets. But it doesn't mean that we are not going to see a prolonged period of economic slow growth. We are still going to see that, and that for me really tells me a very compelling story that the economic activity in the global economy will continue to slow down, and we're going to see the results of this in the economic numbers, whether they are coming out of China. We've seen the factory orders coming from there. We've seen also the data from the US yesterday, and the economic numbers released today are somewhat feeble as well. So with this outlook and the bounce that we're seeing in the equity market, I think it will not last, despite the fact that European markets are up over 2%, US futures are trading higher, and we had a 1200 points jump on the Dow Jones. I think this is just a slightly correction for this massive sell-off that we are seeing, and the markets are likely to continue to the downside. That's all for today. See you guys tomorrow.